Good evening, everybody. Welcome to ACY Securities. I'm Nathan Bray, so I'm one of the trading mentors. You'll see me doing some analysis through our YouTube channel, and of course, one of the senior account managers here at ACY. So welcome. It's a pleasure to have you here, and it's also a pleasure, I guess, for me, because I'm a bit of a trading nut. So I'm going to enjoy, I think, taking you through 5 really important trading strategies, different types of trading strategies this evening. So I just want to do it as a sidebar here that we won't be going into great detail when I go through each of the strategies due to the fact that there is 5 to cover in a relatively short period of time. So think of it as going in the showroom and having a look at a car, not having a chance yet to take it for a test drive or get into too much detail. So I'll take you through those, and I'm looking forward to do so. Also, I just want to point out that we will just be focusing more on key levels to trade in the strategy. So we'll be focusing on the entries. Okay, we will look at extensions as far as maybe your exit goes or profit targets and things like that. So I will go through the strategy, but mainly focused on the setups. Now, remember, everything you see here this evening, yes, it's been collaborated on with professional traders developing these over about the last 10 to 15 years. Okay, so they're all taught. All right, so you can get access not only to what you're seeing on my screen as far as your MetaTrader 4 setup goes, so yours can look exactly like what I'm showing you, but then it's actually taught as well. So that in both our live webinars by our own senior market strategist, Duncan Cooper. So he actually goes through, does analysis, and he can use any one of these 5 strategies for you, and then answer questions live in the market. The other part, of course, the easier part is we have a 30-part trading course. All right, so you get a chance to listen to all the recordings on everything I'm covering in detail. And yes, there's over 30 hours explaining every tiny morsel for you. But over the coming weeks, I'll then go into more detail and do a separate video just on one at a time. Okay, so you will get a chance over the next sort of month to 6 weeks to have a chance to do that. All right, to start off with, yes, I've got a couple of questions. So the question I've got here is a question about when I mentioned trading system. Does it cover more than some trading strategies where the latter is a subset of the former? Wow, what a question. Okay. Wow, okay. Feel like I'm reading Shakespeare. But yes, it will cover a bit more detail. And as I just mentioned then, it will go into every aspect of the technical analysis, the layout, and it will also go into detail where your account manager or someone like myself here, trading mentor, can do trade reviews with you using that particular strategy. So it's great in that you'll have the setup available on your platform, but as you start to use it, and by all means, folks, you might want to use it, say, in a demo account to test it, or use really small micro amounts when you're trading to get confident with it, okay, at the beginning, where you're risking perhaps only a couple of dollars, all right, while you're going through that learning phase. And yes, it does get into a lot more detail, okay, that you might need to understand it. So yes, that is all covered. All right, so what I'm going to do now, you've seen me here at the ACY headquarters in Sydney. I'm going to get in and start sharing my screen. And let's go through all 5 of these trading strategies with you. Now, no doubt you can see my screen now, so welcome aboard. And before we get going, keep in mind, this is a risk disclaimer here. Feel free to have a read through. Yes, I'll be taking you through the concept and showing you the trading systems, but keep in mind, there'll be no personal advice done today. However, I will be looking at the market live and no doubt making some comments. So keep in mind, There's no personal advice happening today, but it'll be more important, I guess, to understand the concept behind it and actually see it for yourself. So we're going to start off, and I'll just spend a minute or two on each, just talking about, I guess, why having a trading plan is so important, or a trading system is so important. And then we'll say, well, what should a trading strategy or plan consist of? Okay, very briefly. And then we'll go in, and these are the 5 I'm going to cover for you this evening. The first one is called the dynamic intraday support and resistance strategy. Okay. The second is trading inside the range. The first is more designed for, as the name suggests, intraday type setups. However, of course, that could carry on, hopefully, for days or potentially even weeks. But the first one would be more designed for intraday type trading setups. The second one, trading inside the range, then starts to lend itself when you're looking for, say, swing trades, where you might be in it for potentially hours or days, okay? And then from there, we'll be looking at another sort of swing trading approach or short-term trading approach, depending on how you choose to use it, okay, is what we call the time-poor trend trader, okay? We'll have a look at that. And then I'll show you one of my personal favorites is the simple fib trader, okay? So again, this is a trend following strategy. The last one I'm going to look at is what I call the key level trader, okay? When you're looking to trade off key levels in the market, and that can lend it to looking at trades for days, weeks, and potentially even months. So we're trying to cover strategies that are going to assist traders, whether they're looking at the market for a short period of time in a day or looking to get in and out in perhaps a couple of hours, right through to people that might be trading a longer time frame, requiring less analysis or ongoing watching the market. Okay, so first quick question. Why having a trading plan is important? Now, I guess the first thing is when you're creating a plan, you want to try and identify what your goals are. Okay, so if your goals are, I want to be able to make some money only watching the markets for an hour or two a day, okay, at a particular time each day, which I'll show you an example of one of the strategies that does that, then you kind of therefore have to say, well, I need to identify a strategy or do my analysis to make that a reality for my trading plan. If you're someone who perhaps doesn't have much time at all, then you need to have a different approach, okay? Meaning you need to be able to realize maybe I'm at work or I'm away, so I don't have time to sit there and watch the market. Then you need to use and adjust your plan based on your goals. I think what's important is getting an idea if a way to manage your emotions. So if you're in a strategy where you're taking multiple trades in short periods of time, you're going to have to deal with the fact that, you know, trades aren't going to work and they may not work one after the other. So having a plan, it's important because it allows you to just become a little bit more mechanical, okay, and not to get too emotional or stressed about, you know, trades that are losing back to back because we're doing a large number and therefore we need to be mechanical to take away some of that stress. And I think that leads to the next point, which is, you know, we're looking to trade with less emotion and stress. That's why the trading plan is important. We're looking to spend time identifying opportunities and then in effect, we're rinse and repeating, okay? So we don't get caught up in thinking, because I know recently with this, Bank of Japan came out over the last couple of days with a big announcement and we saw big moves in the market. You could be sitting there patting yourself on the back thinking, I'm the greatest trader in the world. Look how you know, much money I've just made, for example. And then, of course, the whole thing can reverse, okay, on you. So, you know, you want to take emotion out Okay, it's great to get excited, but I think having a plan allows you to exit and not get too caught up in the wins or the losses, but try to keep it at a mechanical medium. Okay, the other part is develop your processes. So if you look at any sports star before a match, you know, when they're going out in front of a big crowd, you know they've got certain things that they're doing. Okay, and I won't use any particular sport example at the moment, but you'll see certain people listen to music, they, you know, do some warm-ups, they go and feel out the ground, like they've got some things that they're doing, okay, so that when they are, you know, playing that game in front of that atmosphere, they're kind of got the process. And I think trading is very similar. Obviously, we don't have a big crowd, but we are in a position at the start of each day. I know I do it. I look through and get an idea quickly as to what's going on in the markets, where's the world at, and so that I can then have my biases and say, right, now I'm ready to look to operate a particular strategy at a particular time. Okay, I think those processes are what allow you to be able to be mature enough to execute the strategy. And that's something we'll touch on today, but we won't get into it in too much detail. I think the third part, or the last part here, you really need to manage your risk. Okay, you need to develop a profit strategy. That's important. And you need to develop a risk strategy too. What will my losses look like? What will my gains look like? What are my setups looking like? So I would say there are a whole variety of reasons there why a trading plan is so important, which is why we're going to go in and sort of show you 5 strategies to achieve that. For me, what should a trading plan consist of? Okay, 3 things. I keep it very simple. Okay, I don't try and overcomplicate it. I want to have a setup. So I want to know what has to occur, what group of criteria needs to occur to say this is the trade trigger or the entry. Okay, that's what I want to have, and I'm very mechanical about that. The second thing is, once I've triggered into a trade for a variety of reasons, how am I going to manage it? What do I do when I go in, and why? The why is the most important part. It isn't about getting a feeling, oh, I got a feeling that, no, you know, like, no. It is mechanical. It is boring, okay? I mean, you can play your favorite music and you can sing songs if you want to, or you can cheer. You can do whatever you want. But remember, the mechanical part of managing your trade should almost be preset. If this happens, I do that. If this happens, you know what I mean? You have that kind of game plan set out as far as your management goes. And then the third part is your exit. Okay, so you need to decide when to close the trade. So you might choose a strategy and say, this is when I'm going to either take profit, this is what I'm willing to risk. I might put in a trailing stop loss. I might have partial profits. I've got it laid out to say, if this happens, I exit, right? So we've got entry, we've got manage, and we've got exit. That to me really is what your trading plan needs to consist of. And then it all comes down to how you execute it. So you've got to say to yourself, when you get into a trade, you've got to say, is this really a setup? Oh, it's kind of a setup. Oh, it's pretty close. No, it needs to be a setup. Okay, so that would be the other piece of information I'd say. It needs to be pretty strict, okay, as to what it is, and say, is it that? And if it's that, beautiful, you can enter that trade. The reason being, folks, because otherwise you end up in a position where you don't know why you're successful or unsuccessful. You don't know if what you're doing is you've got an edge. You don't know that because you look back and it's like a hodgepodge of different kind of trades at different times. And that's why I think these trading strategies and a trading plan is so important. Okay, quick question coming in before we get into it. We're about to start these 5 strategies for you now. So I've got a question coming in saying more of a statement actually. So it's more mechanical in following the trading plan guidelines instead of making discretionary trading decisions based on, for example, fundamental analysis trading. Yes. That's very true, okay? Because what we're looking at is the what in this particular set of 5, okay? Not we're looking at when as opposed to why. I want to know what and when and follow that as opposed to why, okay? Because if I'm in a stadium full of people cheering for a particular team, right, I can look at the scoreboard, see the stats, hear the crowd. You know what I mean? I don't even have to know why the crowd was so excited. I could go and watch a sport I've never seen before. But I'll pretty quickly be able to go, well, that team's got more than this team. Of course, as long as it's not golf. Then I know the scoring mechanism. I know the stats. I know the time. So when I'm talking about these 5 technical approaches, we're saying we're looking at what the market is telling us and that we can see. Okay, that's what we're focusing on, not on what may be the reason why people are choosing to buy and sell. And the reason why fundamental trading, can be drivers, they can be the why, but it's more important to know, I guess, what and when you're doing trading. Okay, so that's why these systems, and please don't get me wrong, I'm not disregarding fundamental. I'm just like, when it comes to watching the price because of a time parameter, right? When it comes to trading, I in effect am going along with what the market's doing and what the market's telling me. So let me now, okay, move in and I'll show you my MetaTrader 4 screen here. And just make sure, of course, you can all see it. Okay, so we're looking, this is the first strategy, okay? So this is your dynamic intraday support and resistance. And remember, I'm just going to show it to you and outline it. So what it's using is a system called pivots. So pivot lines, and they're just drawn a little bit differently. There's a few elements on here I'll show you. So it's a 15-minute chart that we're using. So we're basically looking at, a day and a half in effect, but I'll squash it in. So what you notice is you see these red lines here, bend, and then they bend again. So from bend to bend is one whole day. Okay, that's one whole trading day. The red lines are deemed as intraday resistance areas in the market. And if you go down to the bottom, the green ones are deemed as intraday pivot support levels. Okay, so I'll go and show you an example of what's happened over the last day, etc. The other thing that we have, just before we get to that, I'll show you there's 2 blue lines as well. This is just an indicator that gives us an indication at the start of the day where today's projected high indicator is going to be. Okay, so it's just a calculation and it comes out each day for you. And you'll also see another blue one that says today's projected low. Okay. Other things we've got in there are called the figure. So every 100 pips, so 109, 108. All right, we put this red dotted line in there. And I guess the other aspect that I'll use as a simple intraday trading indicator, I'm just wanting to see potential changes of direction, okay, which you'll see down the bottom using this MACD with a histogram. So I'm going to now click on it and put it back into perspective so we can see the chart as it is. And you'll notice here that yesterday or last night, price rallied pretty quickly all the way up into these red area or that intraday resistance level. And then we saw price collapse all the way down to the first green pivot. And then it collapsed further down towards these intraday support areas. Okay, so what we're sort of using, what we're looking at here is saying, I want to be able to get an idea of when I see a change of direction, I want it to be somewhat more meaningful as far as the way price action, if I'm intraday trading based on previous days' trades. For example, today, a few hours ago or an hour ago in total, we just had some European data come out. Okay, so their data came out, it's a bit mixed, but a little bit more positive. Notice how price rallies. One thing I didn't mention is the moving average, okay? Rather than have the moving average as lines, I want it as a level. So this dotted line called the central pivot, it will set for the day and say, right, this is the level that is sort of like the moving average level for the day, which we can use to trade off on the short side or to go long with as well. Okay, again, that would be all explained. But what I want to show you is, look at today. We had all this positive news. The market is shooting up. So if you're in a long position in this euro dollar, look what happens. It shoots all the way back up. It cannot get above today's projected high. So if you're in a long position on an intraday trade, potentially from the green support lines from yesterday, then you also need to have a target. So you also need to be able to say, okay, what do I want on the screen? I want things on the screen when I'm intraday trading in this strategy that are useful, and I want to get rid of things that are not. Okay, if that makes sense. So what I want is a relatively clean screen to look for opportunities. Okay, so that's what this strategy is all about. I'll show you an example of, say, a buy setup very quickly to show it to you. And that, in this case, I think was on the Aussie dollar. So Aussie US dollar. It's a scenario where I'll show you this is a 3-step solution for, because what we're looking for in effect, intraday trading, is changes of direction that are confirmed. Okay, so I don't want to just say, oh, trend line, because it's only one reason. I want to have, say, a multiple confluence of reasons that are in agreement. Okay, but I also don't want to have a million indicators telling me different things. So let me show you an example. Step 1, is the pivot line, and it can be any pivot line, respected? Now, when I say that, I mean price comes down, and see how it can't get below that pivot line, this black pivot line here from yesterday. Okay, so I know at this point, price has gone down, this candle's gone up, okay, this level's held. The second thing I'll do is say, okay, the pivot line is respected. That level's holding intraday. And then I'll draw in a trend line across these 2 high points, for example. Okay, so I could have drawn this trend line in here. There you go. So I could draw this trend line in here, see that it's respecting this pivot line. And then as I move it across, I'm there for the next half an hour, or boom, it's broken it. Trend line's broken. So I've got intraday pivot level respected. I've got a trend line break, and look at this, my MACD's also just crossed up. So what I've got here is saying to myself, I've got 3 areas using the pivot system where they're all in agreement. The problem is, folks, and I know this from trading a while, the thing we've got to admit to ourselves is we don't know how long this change of direction is going to last for, right? We just don't. People that say they know the market or have a magic indicator, I haven't seen one. So I can say to myself, though, at this stage, I have a pivot level that's respected. I've got a trend line break and a MACD cross. So if I was, for example, then to have a rule where I put a stop just below this bottom and I targeted a very simple 2-to-1 type strategy. So I said, right, even if I entered here, I'm risking 14, 15 pips, let's call it 16 pips. And I want to target like 30. And you'll see here, price obviously rallied, interestingly, up to what I said was the moving average level, that central pivot, before it failed back below that, okay? So that, in effect, folks, is what we call the dynamic intraday support and resistance trader. And it's something where when you're looking at a chart, you can therefore go in and look for setups. I find the most interesting time to use it, and you'll see down the bottom here, we've got the market open live on your chart. I think that's really important. And so you'll see here, you've got the Frankfurt open, London open. So we're soon to have New York pop up there when New York opens. So we're able, in effect, to trade close to, so we can literally go Tokyo, Frankfurt, London, New York, back to Tokyo. And that would then start a whole new day, okay? And all these pivot lines would bend. See how it bends right around Tokyo. So Showing you this, I've kind of given you a lot of information, but I'm hoping you kind of get the concept, okay, of using intraday levels, multiple reasons, okay, and going off either potentially resistance intraday levels, which are red, and the green levels, of course, are the support. So I'll squash that back in. So we can see right now with this, say, Aussie dollar, price is above the average for the day. And therefore, if you're in a long trade, one might just target, say, as a guide. And the concept is you can just rinse and repeat this. You can look for levels, look for setups, and then enter the trade, set your criteria. And it's the same thing you're kind of doing day in, day out, intraday trading style with a reason. Let's move on from that one. I don't think there's anything else. Yeah, let's look at New Zealand yen. Actually, we'll come back to that. It's the same one, same concept that I've just explained. So you can look for either buys or sells. Actually, just let me take you back a fraction. So see how price has come back up today. They set this pivot. And see how price has rallied all the way up to it and it's kind of failed back below. Okay, so we're using these levels. See, at the start of the move, it respected this pivot down here today. So we're kind of using them as those guides, the changes of direction for potential trades, I guess, either up or down. Okay, so the next strategy is called price action. Okay, it's a price action strategy, and it's we're calling it trading inside the range. So again, all of these profiles you're seeing on my screen, okay, we set these up for you on your MetaTrader 4. Your account manager can do it, as I mentioned. So all of these are set up with all the different instruments you want to trade with the same templates across all of them. Okay, so this one is the trading inside the range strategy. So let's go have a look. So for traders that aren't necessarily looking for really shorter term hourly intraday trades, this is a slightly different approach. Okay, so we'll start off on gold. So the concept here is we can trade in line with longer term trends. So this is a 4-hour chart, okay? And what you'll see on your screen, it's pretty simple, but it allows you then to use it as a guideline to be able to set your strategy up. So what you've got some dotted lines. So you've got your mustard ones, which are your monthly, okay, levels, either top or bottom. And then the red ones, which we'll use in this example, are your last week's high and last week's low. So what we're doing is we're almost looking for trading opportunities inside the weekly candle. So let me just draw that in so it makes more sense. If I go from this red dotted line to this red dotted line, okay, that gives us an idea of what last week's candle looked like. So let's say the trend is down, and in gold's case, it is. Okay, it's in a downtrend, putting in these lower tops and bottoms. I can almost use last week's high as a spot where price is failing at, okay, for short positions. So let's say price fails all the way from the top of last week. This is how the candle would look like on a weekly chart. So I'm seeing price fail all the way down to the bottom. Now, if the trend is down and I'm trend following, I'm going to look for a short. So what I can do is say, where are potential levels that I might look to trigger into a trade? So using the fib tool, okay, so I'm drawing the fib because I'm looking for a short top to bottom. Okay, you'll see I've drawn this in from that red line to this red line, the top of the week, bottom of the week. And I might be saying, right, if price rallies because the trend is down, if I get a retracement, okay, on this 4-hourly chart up to, say, a 62 or 79 fib level, then can trigger into a trade. Like a really simple strategy, trading in line with a longer term trend, looking for a significant retracement. Remember, that retracement may not happen, okay? It may not come. So that's why this is really important, that we look for opportunities and have an approach. If it doesn't come, we don't enter, okay? So if you see over the last few days, price at the start of the week has rallied just inside at this point last week's downward candle. It might look exciting, but it gets up to this 62 fib retracement level, and you'll see it fails from there. So if we click in at that level, we can look for a trading opportunity down. The next day, price rallies back up and fails again at that 62 fib retracement level. So it's almost like we're using the range to be able to trade in line with the trend, okay? Or we're using the range to trade off top and bottom of, okay? So let me give you an example. So that is when you're trading in line with the trend, looking for a significant retracement and then going short in this case. But another example I've got is the pound dollar. So look at this pound dollar, and we're just on a 4-hour chart here. You can see for most of the week, last week's high has been a level of resistance, okay? If we go down to the bottom, it's also been a level of support. So just to give you that example, if I'm now trading up, okay, with the pound dollar, I'll show you the daily chart. So the trend is certainly up, right? We're putting in higher bottoms, higher tops, right? But now what happens when we're consolidating sideways, okay? Are we consolidating sideways before a further break to the upside? So therefore, if the trend is up, rather than trading off both sides of the range, we can say, well, I'll have a bias to trade in line with the trend, so therefore I'll just be a buyer at the bottom of the range. So when I look at this little tool here, I'm like, it's already telling me. So at the start of this week for the previous few days, you can see price didn't quite get down there, which is what I was mentioning earlier, right? I would be furious. I'd be like, oh no, it nearly got down there, but it didn't quite get down there. The next day it didn't, and now all of a sudden yesterday or over the last, sort of couple of days, price gets down, and therefore using this range trader with a bias to the buy side, I can trigger in. Now remember, you could have a pending order set too. So with these levels, you could literally look at it and say, all right, if it gets down to this price, trigger me in. Therefore, you don't have to be watching this particular strategy. So it's kind of useful like that. And you may therefore also have a target, right, at the top of the range, because it is kind of in a range, right? So you'll see right now, gold has rallied up to the top of the range, and right now it's failing. So that in itself, I think, provides an example of how using these longer time frames and just looking at trading inside either monthly or weekly candles. Of course, you can use it on daily, but we sort of just use weekly and monthly for that purpose. The other part that you might use it for too is if I go put it on an hourly. So when I'm looking at an hourly chart, watching the market, notice how price on the pound, it rallied really quickly on the back of good news. But because I'm on an hourly chart and I can see it's up around today's projected high, that also is right near last week's high, it allows me to say, perhaps I could take some profit here, or if I want to be a buyer, maybe I don't want to buy into that. But I've got it kind of in front of my face on an hourly chart. So that's where these tools and this trading strategy allows you to not be as involved watching the market, setting some pending orders, having a logical approach. So I think the last one there, I'll show you Euro Yen. Yes, I think this was Duncan Cooper, our senior market strategist. He was ribbing me the other day saying, did you get into this? And you'll notice here, you'll see that last week's high and last month's high are right near each other. Okay, so suddenly we're in this range where price can rally up in an uptrend. pulls back to last week's low, and then suddenly, do you really want to be a buyer up into last month's high and last week's high? Okay. In fact, you could get a lower top setup. And if I zoom in, even on a 15-minute chart there, this level up here, if you're using a 15-minute chart, you can have it trigger very similar to what I showed you previously and zone in on it and see if you can't then get a trigger for a change of direction on the shorter time frame. Okay, so any questions about that specifically on how that works? Now, the other thing I want to point out too is it's like all these things take a while to seep in, and that's why using a demo account is so important. So yes, you will, everything I've explained here is going into far more intricate detail. So be sure to watch the actual recordings of what each of these elements you're seeing on your screen here actually mean in detail. And then once you've watched it, practice it in your demo, you can always come back to us and we'll spend some time answering any questions you've got and going back over with you again. Okay, so let's move on. So we'll go from price action now. So this is the time poor trend trader. Okay, let me show you this. This is a very simple color strategy. It's just color matching, trend following strategy. So it's for people that don't potentially have a lot of time and they may say, well, on the Frankfurt Open each day or on the London Open each day, I do have some time. I can sit there for 10, 20 minutes and I want to look for potential trade setup. So let's go in and look at that. Okay, so again, remember all of these tabs are opening too, as you can see. So you've got a whole variety of different setups. It's a very simple process. This, you stay on an hourly chart, you don't need to move. And I'll just show you an example. So what you need to do is look down the bottom here where my crosshair is. That's your daily trend. You don't need to go and look for higher tops and bottoms, lower tops and bottoms. Is it green? Therefore, the daily trend is green, and then we go to the one above it, which is the hourly, which is we're matching trend and momentum. Okay, so we're saying the daily trend is up and the hourly, which can pull back, is now starting an upward trend as well. Okay, so we're looking at 2 time frames, trend following, matching, green, green, very simple. To enter the trade, all we need to see is price. And this is the example here. So you'll see all we need to see is price go up and hit a green dot. Okay. If you get green, green, and price go up and hit a green dot, okay, that's your trigger. So what you're saying is daily trend is up, hourly trend is up, and momentum is going up. And then I'm only going to enter if I get a, and this is the trigger I was talking about, if I get a breakout in line with the daily and the hourly. So you're sort of looking at yourself for your trigger as a breakout in the direction of following both daily, hourly, green, green, green. Pretty simple. Good example I can show you at the moment is the S&P 500, folks. Stocks in the US, they're on a bit of a tear, have been, and this was a setup that occurred here yesterday, okay, and you'll see it broke out again, and obviously over the last probably 12 hours, price went up and triggered here. If you were to put a stop just below the red dot, okay, so it's very simple, and then whatever target you want to target your risk reward strategy. So you can go through the whole, I guess, the whole market. So if we go quickly, and I'll just show you the example. If I go Aussie yen, they're now matching. See that? The daily is now green. Sorry, the daily trend is green and the hourly is now changed. So all we need to see now is price go up and hit the green dot. So in this case, this could happen this hour. This could happen in 3 hours' time. Okay. So it's one of those things when you're a bit time poor, you can go through, find the ones that are matching and that might be getting close and focus on them, throw everything else out. And I'll show you an example in a moment. So Aussie dollar, not matching, green, red, not matching. Or get rid of that. It may change down, so you can come back and check, but you can click through and say, I want to look at 12 different potentials here. This is a potential. Green, price has got to go up and hit that green dot, okay? So that would be an entry. This isn't because it's green, red, okay? So summarize that one. It's very interesting. In fact, I'll show you one that actually just set up on the back of that positive news. Here, for example, we had, pound yen. So you'll see here, prices rallied on the back of that news. And that, of course, is when you were talking about fundamental, they're things you've got to be aware of. But this strategy doesn't know that. It's very simple, okay? So price rallies, that triggered it, okay? Why? Because we've got green. Now, what I would suggest is make your own some strategy and stick to it. Some people are like, if I'm not there for the actual trigger moment in that hour, then I don't get in. Other people will change that and say, well, as long as it's at the price that it triggered or within 5 pips, whatever variations you're going to do, you have to stick to them, all right? Because otherwise you'll come back and go, oh, I was doing it was close to it, or it needs to trigger, okay? So that's what I'd say to you when you're looking to make variations, whatever variation you do, you stick to it, okay, for a period of trade so you can come back and have a data sample to see whether or not it's working for you or not, okay? I'll look through if there's anything else. I think at the moment it's very much stock related. But at the same time, you can look for sells too. So I'll just show you that very briefly. If it's red and red, for example, which this isn't, okay, you'll notice that it comes down, it triggers on the red dot, and you put your stop above there and target, say, 2 to 1 if you want to down here, okay? One variation too is whatever you're risking, say you're risking 20 pips, once your trade is up 20 pips, you could just move your stop to break even, okay, and get risk out of the trade completely. So this strategy allows you to go through, look for potentials, get rid of everything else, focus on those, come back and check, and if something triggers, then you enter, okay? And you can do that every single day. All right, so the next one, we'll have a look at what we call the simple fib trader. So it's using your Fibonacci tool and trading in line with shorter term trends. So this is like a 1 hour approach. So I'll show this one to you. Okay, so what we're doing, and I think I've got an example here too that I've been looking at. Okay, so we're using dollar CAD. So it's a pretty simple process. What we're using is just an hourly chart, and we're saying, I want to draw a fib in, and rather than looking for a breakout, I'm looking for a retracement in line with the trend, either up or down, okay? So, and remember, just get your head around the concept of this, and obviously the education and the practice will make a lot more sense to you. But let's say price here has been going down, which it did. And then you're thinking, oh, well, it's going down. I've missed out. It was right up at the week's high, etc. I've missed out. What do I do? Do I just dive in now, or do I just miss out on potential money? That kind of feeling that you get. So what's useful is using this fib tool. If you haven't used it, Duncan goes into this in great detail in his webinars. But if we look at this whole move down here, right? So I'll draw the fib tool from top to bottom of this move. So let's say price is sort of sitting around here, and I'm like, oh, it's moving down. What I therefore look down the bottom and see it's red. So we're looking at the start of the move, it says red, going down. So therefore I am looking for a retracement up, say either, and you can choose what you want to do, up to the 62 fib retracement level, or you could go further and go for the 79. It's up to you. Or somewhere in the middle of those two. I call it like almost like a dead zone, okay, when trend is going down. And the simple way to think about it, it's like, you know, if you want to buy a house in Sydney, right? Let's say back in the day, you had $500,000 and you bought this house and then price goes up, but another person didn't buy the house. Price goes up to 600,000, 700,000, 800,000. You're thinking, no, I could have bought it for 500. But then sellers come in, price starts to pull back. And then the fear and greed kicks in and people go, well, I'll definitely buy it for 600, right? Like I'd pay more, right? This is the whole concept of what trends are. It's people willing to purchase and buy buying power at a higher price. And then at this time it goes up to $1 million or $1 million plus. Okay, and then we get a pullback. So it's like we're going in line with the trend is your friend. So we're looking for a retracement. Conversely, the same thing if it's going down. So it goes down and then we get a bit of a rally back up. What could cause these rallies? Profit taking, right? Like if someone's got to take profit, if they bought something, the only way to take profit is to sell in that case. If they've sold something, the only way to take profit is to buy. So we're expecting this variation in movement. So if we get this big sell-off in probably 8 hours, we then say, if I get a rally back up, and you can see it over here, the 62 level, and I'll just draw that line in. That black line is the 62 level. If price comes up there, the simple way is to just trigger in. You just enter the trade. It just has to hit it, okay? And then you could say, well, I'll put my stop above the previous high. And again, that would also be above the last week's high. Okay, so you're sort of looking at it going, what is my rationale for being a loser? Well, if price decides to go back above the previous high and get above, last week's high as well, okay, say 5 pips, then that would be my rationale for saying I'm going to exit this trade. I'm going to call it a loser. As part of that strategy we talked about, having a reason for entering, okay, but also defining our risk and having a reason for that too. And then you say, well, where am I going to take profit? Exit part 3. So we've entered here and we can use the fib tool and say, well, I'll target the 127 extension, okay? Boom, that line. So in effect, we've entered here and we've put that as our automatic exit this trade, take profit level, and we've got our stop loss in. So what we're seeing is price rallies, yes, above our entry point. You can see it spiked up a little bit, okay, but it certainly didn't get up to our stop. And then it fails back, obviously, lower, okay, and it reaches right here, that 127 extension. The difference is with this, trade as far as why the 62, why the 79, etc. It's because what you're doing without realizing it is you're saying, for each trade I'm doing, in this case, I was risking, my target is say 55, 56 pips, right? My risk, however, was 26. So automatically by using this strategy, I'm implementing a 2-for-1 risk reward in line with the trend. And I mean, if you want to be a seller, you want to sell at the highest possible or a higher possible price that you can get in. If you want to be a buyer, you want to buy, in your mind, the lowest possible price. Okay. So what this is doing is saying that the trend is directional. You can see the color down the bottom, but I want a retracement and that will trigger me in. I'll decide my loss and then I'll have my target. So the reason being, if it's around 2-for-1 risk reward and you do 10 trades, 5 of these might be working and 5 of them may fail, for example. And I can't even guarantee that, obviously. I can't guarantee anything. Why? Because we don't know what the market's really going to do. Okay, we don't have a crystal ball. But if I'm risking $100, for example, on my trade and targeting 200, then suddenly my 5 winners is $1,000 and my 5 minus my 5 losers is $500. I've made $500 and I'm using a hourly chart and going in line with the direction. So it's quite a simplistic approach that you can start to use in your trading. And I think it's definitely on an hourly chart a lot of fun. Okay, so you're getting a lot of opportunities, because right now we're looking at this, say, move down, and we could come in, and I'll just do this as an example based on where we're at right now. We're going to assume that this is the bottom and the trend is going down. I didn't draw that perfectly, but I think you get the idea. So you get the idea. So you've literally got it going down, the trend is down, and we get a retracement up to, say, the 62 level, which just happens to coincide, okay, with maybe a longer term support acting as resistance in line with the trend. So we're sort of looking at that and going, that's the spot where I will trigger in to this trade. So it's kind of ones you can set up across, and if I just click on, I'll show you, everything looks exactly the same, right? And you're now using a hourly retracement strategy, which I just think is such a simple trade strategy to use, all right? You're literally using a simple fib trading strategy on an hourly chart, okay? Again, Duncan Cooper's going to teach all this to you in far more detail than I'm covering it with you this evening, but I hope everyone's got the idea here. All right, now to finish off with, I want to look at maybe a longer term type trading system here. So I'm looking here at key levels. I call it the key level strategy, right? Where I'm using, say, a simplistic approach, 100 pip stop, and defining key levels looking at longer timeframes. So let's go and have a look at the Aussie yen. Yes, the Aussie yen. And I'm going to change the profiles again. And we're going to put it on, I'm going to put it on a weekly chart now. So, in fact, we'll go Euro yen. I thought that one was a little bit nicer. Okay, so if what I'm looking for is multiple reasons on the longer timeframes, okay, to look for levels. And remember, these levels you can just, once it's triggered, you could say 100 pip stop, targeting at least, say, 200, 2 to 1. And this has some room to move. It's not super tight, like, you know, it's not like you've got noise of the market going to take you out, but you're allowing them this to be preset, okay? It could take days, it could take weeks. However, it could take a few days or a few hours, depending on what happens in the market, but it's one where you're trading off key levels. So an example I'm looking at the moment, if I go to this pound yen, I think we can see it there pretty clearly. This is a major level of resistance, okay, up here. So I'm looking at this weekly level of resistance as a place where I'm off a key level, I could put literally 100 pip stop above that level when price gets there and just trigger into the trade. So if I go down now to the 4 hourly, you'll see price literally rallied up, and then we got 120 pip move down, rallied back up, test these levels, 140 pip move down, etc. So I'm using longer term time frame levels for multiple reasons. Okay, so I might combine a few things there and say I'm going to go off a major level of weekly support if the trend is up, and I get a pullback to that level which coincides with a retracement as well, and then I will just trigger into those trades using the longer time frames. And what you'll find, I guess, interesting is what you're seeing on the hourly charts. They're saying above, and what is above is below. kind of approach, right? It's like the longer term charts can act and appear very similar, right? Patterns that you'll see on the shorter time frames as well. So to finish that off, let's just have a look. So we'll go pound dollar. You'll see pound dollar here. Let me show you this example. So see this level of resistance. So we're actually putting in a lower top, and it's major daily resistance levels where price is rallying right back up to now and it's failing. So if I show you that, say, on a 15-minute chart, you'll see what I'm talking about. I've drawn that major level in, and I therefore am looking at these key levels in the market and saying, what if I only traded my short-term trades, but rather than respecting a pivot, I respect larger, longer timeframes as well. So that's where you can start to not have to watch your screen every day, and you can just literally check in, but you're looking for more significant longer-term key levels to trade off. And to finish off with, I will show you this one, which is one that we put out. We also have our live interactive trading feed where these longer term key levels are posted or broadcast out live. They're not trading signals. They're for you to have a look at and make your own judgment. But if I show you this, for example, using a daily chart, the trend is up. We can see that on the daily. Whereas I was saying, therefore, I want a significant pullback where previous resistance is becoming support, and we form a double bottom, say, on a daily and a weekly level. And therefore, we get this nice rally all the way back up to resistance. So if I'm risking 100 pips here, and then I get a 200 pip move higher, it's gone back down and retested the same thing. Yes, it did go fractionally below, say, on this daily chart, but you've got 100 pip room, okay? So that's where we're using longer time frames, key levels for multiple reasons, to look for a more simplistic approach where we don't have to be as engaged. All right, well, I've got to say that's got us through all 5 strategies, okay, that I want to show you, from shorter term, longer term, and I guess how you, the things that I found was having the setup on my screen. So when I'm watching someone do analysis or a webinar, someone like Duncan Cooper, or teaching you, I can say, well, my screen looks the same, okay? What's happening on his screen, mine looks the same, and therefore I'm learning the approach with the necessary items that I might need, either as a guide to take profit or not enter the trade, okay? Or as a guide to say, I know where I'm going to trade off. All right. So any of these things you want, folks, feel free to register your live account. So you just go to ACY.com and click on live account, and you register your live account. It's free to do so. There's no obligation to fund your account, and you get access to all of this. So you get access to all the 5 strategies. You get the education. Of course, you get it set up, and then your account managers can do the trade reviews for you. Well, I'll just check finally to see if there's any other questions coming through. Okay, questions come through about performance of that particular strategy, and the answer is I have no idea. Okay, so I'm not sure exactly what you're referring to there, but feel free to contact me, and I'd be happy to have a look at it for you. But you've got to keep in mind, following a strategy is the thing, I think, that can suddenly improve your outcome when you don't have one at all. Okay, when you're wandering around aimlessly doing different things, it's very difficult, okay, to be able to manage your risk and manage your return. So what I would say to you is please feel free to register your live account, get set up, enjoy the education, and of course, feel free to do the trade reviews with us. And most of all, folks, thanks for joining us, and good luck with your trading. Thank you.